fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. And I do expect now, I think the odds of a December rate cut, which had fallen back down from like 90% to 50%, are now back up above 80%. So that's what's going on with the markets. And I think that is also why you're going to see this surge in gold.
Peter Schiff from SchiffGold.com points out that there's one more policy decision on December 10th, and the story being sold to the public is that the Fed is still weighing its options. Powell tried that act at the last meeting, leaning into uncertainty, hinting that things could tip either way, and it rattled markets instantly. Investors don't handle mixed signals well, and pretending the decision was a coin toss never lined up with what was actually happening in the economy. Growth is weaker than the Fed likes to admit, inflation isn't the main headline risk anymore, and the political backdrop is too loud to ignore. A cut was always the path of least resistance. They just didn't want to telegraph it. Over the past few days, the mask has slipped. Several Fed officials have started nudging expectations back toward easing, and the messaging has shifted in a telling way. Instead of hammering on inflation, they're leaning on labor market fragility, soft hiring, slower wage growth, and the idea that the jobs market needs support. That's the kind of pivot investors love, because it gives them cover to price in more stimulus. The reaction has been quick. Market odds of a December rate cut fell as low as 50% during Powell's ambiguity routine, but they've surged back toward 80% as the new narrative takes shape. Gold has been reading this perfectly. With the dollar losing energy and rate cut expectations climbing again, money is moving towards safer, harder assets. And in that environment, gold has been one of the strongest performers in the entire market. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
In fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. Remember, we have one more FOMC meeting. I believe it's scheduled for December 10th. I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations, and the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter because the economy is much weaker than they are letting on. And of course, there's a lot of behind the scenes pressure from the Trump administration. So they're getting a cut. But what helped revive the markets over the last couple of days was FOMC members coming out, including again today, and expressing that they want to cut rates, that the Fed is now, or they are more worried about the labor market and softening in the labor market than inflation. In fact, the party line that they're all towing at the Fed seems to be that inflation is behaving, that inflation is coming down. And so what the Fed is really concerned about is potential weakness in the labor markets. And that's, of course, exactly what the stock market and other markets want to hear. And I think that is what is driving the rally. And I do expect now, I think the odds of a December rate cut, which had fallen back down from like 90% to like 50%, are now back up above 80%. So that's what's going on with the markets. And I think that is also why you're going to see this surge in gold. And I think the dollar is now just rolling over. And the performance of actual gold is so good in comparison. I think a lot of that money is going to start moving into gold. And I think a lot of the money that maybe was on the sidelines, that wasn't buying gold or Bitcoin, but where Bitcoin was kind of killing the gold story, I think now that, the Bitcoin, fever has broke, and now the gold story, looks a lot better to a lot of fund managers who now are not going to say, well, gold, what about Bitcoin? People might buy Bitcoin instead of gold. It's going to be pretty obvious that that's not the case. The central banks want no part of Bitcoin. They're buying gold. And so investors are going to be discovering gold. I think we've already seen the lows for this pullback. We've seen the lows in silver. We've seen the lows in gold. We've seen the lows in this pullback in the mining stocks. And we are all pumped and ready to go, hitting new highs, probably even before the December FOMC meeting.
Here's how Peter Schiff frames the moment. Gold is catching a strong bid, and one of the key drivers is speculation that Kevin Hassett could take over as the next Fed chair. Hassett has a reputation for being more dovish, more comfortable with lower rates, and more focused on smoothing economic bumps than fighting inflation at any cost. Markets see that shift coming, and money is already front-running it. Then you layer in the near-certain December rate cut. Expectations dipped for a bit, but they've snapped back fast. Put those two forces together, a likely cut and a likely dove, and the path of least resistance for gold is upward while the dollar loses some shine. The economic backdrop isn't doing the dollar any favors either. Growth is slowing, households are stretched, and the administration is now rolling back tariffs to ease price pressure. It's ironic, because reversing them quietly amidst those same tariffs helped push prices up. Either way, it signals stress. And while all this is happening, the crypto rush has cooled off. Bitcoin's energy has faded, and the pullback is dragging down the stocks tied to that trade. When speculative heat drains out of crypto, gold often benefits. Let's get back to the interview.
So another reason that I think investors are buying gold again and why they're going to be selling the dollar is the odds shot up for Kevin Hassett to be the next Fed chair. And if you look at Polymarket, he's now in first place with a 55% chance of being Trump's pick to replace Too-Late Powell. 55%. The number two guy is at 21%, Christopher Waller, and then Kevin Walsh is down at 14%. So it's really narrowed down to those three guys, and Kevin Hassett is now the odds-on favorite to be the next Fed chairman. And of all of the candidates that Trump was considering for the job, Hassett is the most dovish. But not only is he likely the most dovish, but he's also likely to do what the president wants. He's probably the most loyal Trump supporter, being, his chief economic advisor. But I think that if Trump wants to put a puppet as Fed chairman so he can pull the strings, Kevin Hassett is the puppet that he's going to pick. So this, I think, is very negative for the dollar. It means a weaker dollar. It means higher inflation. And it means, higher gold and silver prices. I mean, that's why the rally continues. Gold's now up $17, up another $6 from when I mentioned it before the commercial break. So we're now at 41.47. And silver is now above 51.50. It was actually just below when I mentioned it. So it's up 11 cents. So the markets are very strong, and that is one of the reasons for this. So we've got the December rate cut back on track. We've got a super dove teed up to be the next Fed chairman, and the economy is weakening, right? They are, trying to figure out what to do. Trump is starting to roll back tariffs left and right, recognizing that they're not doing what he had hoped, but the economy is in trouble. He's trying to find ways to lower prices because affordability is the big problem, and he worsened that problem with his tariffs. And so now he's trying to reduce prices by removing tariffs without admitting that the tariffs are causing prices to be higher, which is obvious because if removing tariffs lowers prices, then imposing them has to raise prices. It's impossible for that not to be the case. But also, the other thing that I think is going to help the gold market is the air coming out of the Bitcoin bubble and the crypto bubble. And, no better example of what's going on there is in the stocks, these companies. And MicroStrategy, a warning, because I think it was Morgan Stanley that came out and said, there's a good chance that the indexes, the global stock market indexes, like the world MRCI index, that they're going to kick MicroStrategy stock out of the index. If strategy is kicked out of these indexes, that means a lot of index funds that bought it are going to sell it. Now, I 100% agree that strategy never should have been added to those index funds in the first place because it's not a viable business. I mean, there is some kind of software business buried beneath that Bitcoin balance sheet, but it is so small, it is inconsequential to the stock. All MicroStrategy is a levered Bitcoin ETF. And why should an ETF be in an index of stocks, right? It shouldn't be. And if you are trying to buy stocks, which are operating businesses, right, that are expected to make profits by producing goods or performing services, you shouldn't be forced to buy MicroStrategy just because it's been added to an index that it never should have been a part of.
Strange thing about this moment is how everything that looked disconnected a few weeks ago is now snapping into a single, sharp picture. The Fed's tone is softening, the December meeting feels less like a debate and more like a formality, and the prospect of a more rate-friendly Fed chair is stirring up the kind of anticipation that usually hits much later in a cycle. You can feel capital shifting ahead of the headlines. The dollar's grip is loosening as growth cools, political pressure builds, and policymakers quietly move toward policies that admit the economy needs a gentler touch. That's why gold keeps pulling in steady demand while the fast money trades lose momentum. Traders aren't waiting for confirmation anymore. They're acting on the direction they're convinced the story is already moving. And when you line up the signals, softer labor data, calmer inflation, fading crypto enthusiasm, and a Fed leaning toward relief rather than restraint, the metal that gains the most is the one that doesn't need anyone's promise to hold its value. What this really raises is whether the coming shift at the Fed and the renewed push toward easier policy mark the start of a longer rotation out of speculative assets and back into stores of value that thrive when confidence in policy wavers. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.